Okay, thank you so much for your patience. I am back and I appreciate you guys hanging in there with me. Okay, so we're going to try this once more. Okay, all right. So, what we were doing was sharing the screen for the homeownership pre planning course, and we wanted to open it up so that you guys could see it. And when we did that, all heck broke loose. So I don't know. Um, I don't know how many people we still have with us. Trying to see. Um, okay. All right. So hopefully you guys are with me. Here we go. All right. So if you go to page 25 under business owners, and again, I'm still trying to see who we have with us because I don't want anybody to be left out. I got my phone is dinging out of the wazoo. People are saying that they were here and then somehow I dropped them and I apologize. It was not my intention to drop you. So, but I hope that you're with me. All right. Page 25. For those of you who have a copy of the homeownership pre-planning course, this is what it looks like. And it's labeled business owners. Okay. So this what we wanted to talk about tonight was to give business owners an understanding of ways that they can purchase properties. A lot of business owners who are small business owners, I mean people who are larger business owners, they have been purchasing property for a while. I remember that I purchased my first property as a business owner. I think I was like 23 or 24 years old. Um, it's been decades later, but over the years, we've been able to form different corporations, which we still have. Only two of them have been sold. The rest of them we own. And during that time, for the properties that we've purchased, we've always purchased them in our company name. You'll find very few properties that we purchase in our own individual names. So we've always been incorporated. Very few times have we been LLC. Pretty much all the time we've been incorporated, C corporation. We put those companies into a trust recently, and the trust is incorporated as well and purchases property and also purchases insurance policies inside of the trust. So we've got assets that are listed inside of the trust. So I don't know how many of you are buying in your company name, but if you are and you're a C corporation, then what you would need would be your articles of incorporation if you're going to purchase under your company name. If you are LLC, then you'll need your organizational documents that will indicate the owners of the company based on your organizational documents. That's the very first place you want to start because the corporation is an entity itself. It's an entity itself. So you, very rarely, I mean, it depends on where you go because you can go to some lenders. Not only have you given them the information that's necessary for your company, but they also want information that's necessary for each owner. In some cases, they just want the information that's necessary for the one that's going to do the personal guarantee. Does that make sense? Okay, and I apologize for the noise. I'm in my office and people are we're still here working. So people are working and they're doing their thing. So you're gonna hear noise. Okay, so I'm gonna go with the specific questions that we got. But again, if you have the pre-planning course for homeownership that I send out to everybody that registers, then follow me starting on page 25, where we're talking about how your company is organized. So this particular person has been in business for a while. They have been operating, but they have not organized in terms of whether they're going to be a limited liability corporation, whether they're going to be a C corporation. They're just operating in such a way that it's a proprietor, sole proprietorship. So if you're going to purchase property and you want to purchase it in your company name, you want to go ahead and get it organized. LLC, C corporation. I prefer C corporation, but it's whatever you guys, however you decide to incorporate. You want to go ahead and do that, because that forms the entity that's going to do the lending. That is the person. That is the person. The entity is the person that's going to be borrowing the money. Okay, next thing we want to look at, I'm going to skip all of this. If you have the book, then you can go through all of that information. But when we get down to the debt to income ratio, in terms of what a lot of lenders require. Firstly, there are some lenders, and we have a list of them that are in this. If you've got the manual, then you see there the different companies that we have listed. There are a lot of other companies that loan to corporations. These companies we've tried, and we know that they work well, and that they they have the least amount of red tape involved with the qualifying process. Okay, so when you looked at those list of lenders that are there, this information that we're using, we're basing it on the qualification criteria from those companies. Okay, so when we look at the debt to income ratio, we've talked about debt to income ratio before in our prior classes, and what we've talked about is how the lender determines your financial ability to repay, and one of those things that they use is your debt to income ratio. That's them calculating all of your monthly outgoing debt and dividing it into your gross monthly income. So if you are self-employed, what they'll do is they'll average out your income throughout the years, and normally they'll take 72 months and they'll average out that income for 72 months. If you haven't been in business for that long, let's say you've only been in business for 24 months, they can average out your income for the 24 months, and that will let them know what your monthly income is. Also, when you're doing your taxes, it's very important that you not max out your so that you don't write off everything down to netting zero, because they're going to base your income again on the average of your net income. Okay, on the average of your net income. So you want to make sure that you that you don't completely net to zero. Another thing you want to do is you want to make sure that you pay yourself a salary from your corporation. Pay yourself a salary. That also makes it much easier, because if you're going to be the personal guarantor of the loan, then you'll show that you have income and the company will show its income. Okay, I'm hoping that that makes sense. All right. And then the that's the preferred. 36% is the preferred debt to income ratio for most lenders that are going to lend to corporations. Some companies will go up to 50%. Now, when you hear me talk about hard money lenders, people frown on hard money lenders because they don't really understand them. Normally, it's the companies that have never dealt with them before. Hard money lenders do not charge exorbitant interest rates. For the most part, their rates are comparable. Here is what's important, that you understand that they only do short-term loans. So when you go to them, their biggest concern is, do you have an exit strategy? What is your exit strategy? That's what they're looking at. Do you have an exit strategy, and what's the turnaround time for your exit strategy? Meaning, are you going to sell this property that we're loaning you money to purchase? Are you going to refurbish it? What are you going to do with it that's going to cause it to produce income? So if you're looking to buy land, and we're encouraging people to buy land and flip it now. It's a lot easier than buying residential property and flipping it. It's a lot easier. And in a separate course, we can teach you just how easy it is. And it's simpler, it's less taxing, and it doesn't take as long. So let's say you're going to purchase some land and you're going to flip it, or you're going to purchase some land and you're going to set it up to monetize it. That's what they want to know in terms of your exit strategy. So you have a plan that shows that you're purchasing the land. We've already talked to some leasing companies for you and already got some prospective lease contracts or agreements set up, or options set up for you, so that when you close on your land, you automatically have revenue coming in from those option. So now an option would be them looking to see if that property is going to be feasible. So what they do for a period of time when they're checking to see if it's going to be feasible, they pay you a nominal amount to lease your property for a period of time. It's going to be a real nominal amount. It may only be, $70 an acre. But once they've gone through the feasibility study and they see that they want to go into a lease agreement with you, they'll pay you, 750 to up to $2,000 per acre per month to lease your property. Yes, per acre. So in the beginning, when they're exercising their option to buy it, while they're doing their feasibility plan, they may only pay you $70 per acre per month. But once they see that it's feasible and they now want to move into a long-term lease agreement, sometimes 10 to 20 years, now they're paying you anywhere from $750 to $2,000 per acre per month to lease your property. So that's your exit strategy to a hard money lender. You're saying to them, I'm going to purchase this property and I have a plan to lease it to a solar or energy company or agricultural company. This is the pre-arrangement that we have for an option should I purchase this land. This is what they've agreed to do. That's your exit strategy. Or you may want to purchase a building that you want to put your office in terms of your company, your business. Then your exit strategy would be, are you going to refinance this piece of property to pay us back the money that we're loaning you? And so as long as you have an excellent exit strategy, hard money lenders will loan you money and they'll allow your debt to income ratio to be all the way up to 50%. And again, we determine that by calculating the amount of your monthly debts to include the monthly payment on the property that you're going to be purchasing with the taxes and insurance. Okay. And then you divide that into whatever your monthly average income is, and that will tell you what your debt to income ratio is. I'm going to pause now to see if we have any questions that may be there that anybody may have. Okay. I'm looking for any questions. Let me look inside of the Zoom. I'm going to stop sharing just for a moment so I can see inside of the Zoom. Okay. Looking in the chat. Okay. So I don't know if this is a general question or not. You're saying, how do we qualify to purchase property as a business owner? And I was kind of trying to walk through that with you just a moment ago. So I don't know if I've answered your question or not. I'm not sure. I'm thinking that would have been an answer, the way that we walked you through how you calculate your debt to income ratio, what they look for in terms of your debt to income ratio. They're going to be looking at the entity. So if you're just operating as a sole proprietor, what you want to do is you want to go ahead and form your organization by way of a LLC or C corporation. Those are the things that you want to look at, because if you've not done that yet and you're just operating as a sole proprietor, then it will be just like you applying for the loan rather than your company. And what we're talking about is how to help you to utilize your corporation, your entity, to purchase these properties and to, if you want to buy just land, which I suggest, because there are various things that you could do with that land. Let's say you're looking at 30 acres of land and it's got a house on it. You can subdivide the house in 5 acres, and then you can utilize the other portion of the land to lease. Actually, you could take 10 acres and another 10 acres, subdivide those, have your house on 5 acres. We're talking about 30 acres total, and create an easement so that they'll be able to go back and forth on the property without encroaching on the 5 acres and your home where you live. Are you following what I'm saying to you? Then you can take those 20 acres that you've now subdivided into 10 acres apiece, and you can lease one to one corporation and another to another corporation, depending on the topography of the land. So what you want to do, if you purchase that land, you want to make sure that you get it surveyed. It's very important. You don't want to assume that the seller has a survey or that you want to use the seller's survey. You want to get it surveyed. Matter of fact, normally at closing, they'll do a survey because, whoever's doing the closing wants to make sure that they have the proper boundaries of the parcel that you're purchasing. So that's why a survey is important. Also, there could be unknown easements or encroachments that are on the property that you need to know about before you purchase it. All of these things are important when you get ready to purchase property. And I want to remind you that I'm a realtor with National Land Realty. I'm a land professional. I'm also a licensed land title agent. Now, what does that mean? A land title agent can research the history of the property to let you know what's going on in the history of that property, what's taking place in the history. Has there been a foreclosure? Does somebody else have a right to come in and redeem the land? Does somebody else have a claim against that land? Are there some easements now that have not been discussed that are still existing? What's going on with the history of that land that may have some type of effect on your ownership of the property? Then once we confirm that the ownership and the title of history is safe for you to purchase the property, then what we'll do is ensure that title for you so that someone won't come up in the future based on a claim that they have from something in the past prior to you purchasing it. So we help you not only to understand the title history of the property, but we insure it going forward. So somebody won't come up with a claim from way back when and now they're trying to say that they have some type of vested interest or a claim to the ownership of your property. So that's what we do as a land title agent. That's what we do. But also as a licensed realtor. So, I have dual licensure and I'm able to assist you in both ways. But as a land professional that specializes in the sale and the purchasing of land, then I can help you purchase land as a business owner. Make sure that your documentation is set up in such a way so that the financing will be easy. And what I want to let a lot of business owners know, because they're apprehensive, they just get the big knot in their stomach because they're thinking it's going to be so much trouble because they see when people go to get SBA loans or other type loans, they got to have this, they got to have that. And I'm here to tell you that it can be made simple for you. So another thing that you want to do once you've made sure that you've formed your entity, LLC, C corporation, anything other than a sole proprietorship when you're talking about borrowing money, because the sole proprietorship is literally just you operating your business. So you want to create an entity so that it has a life of it takes on an identity of its own. And that's the tool that you're going to use to borrow. You could later on in some of these future courses, we're going to show you how you can also use it to leverage funds. But right now, we're talking about how you can use your business as a business owner to purchase property. So let me check again for any questions. I'm hoping that helped you too. Now, the next tool you want to have after you form your entity is you want to do your financial statement. You want to go to whoever your CPA is. If you don't have a certified public accountant, but you do have an accountant, then you want to go to your accountant and y'all sit down and do your financial statement. Now, we're going to have a course also because there's a part in the book that shows you how to prepare your own financial statement. That's in the homeownership pre-planning course. That's inside of that little ebook that I send out to every person that registers for this course. And inside of there, it shows you a way to slow walk you down through preparing your own financial statement so that when you go to that lender, what do you have? What have we talked about already? We talked about you forming your entity. Okay. So when you go to the lender, you're going to have your organizational documents. You'll have your articles of incorporation if you are a C corporation, or you'll have your organizational documents if you are an LLC. Remember, it's the entity that's borrowing the money. It's the entity that's going to be purchasing the property. That's why you're creating the entity. It becomes a being of its own. So most of the time, they won't be looking at you and your credit. They'll be looking at the entity, and they'll be looking at the strength of the entity. Now, you'll hear a lot of people say, well, you need to get this account, you need to get the account so you can create business credit. All that's great. But when you're buying real estate and you use that list of lenders that's in the book that we send out to you when you register, those lenders specialize in loaning to entities, to business entities, to corporations. And what they're looking for is the debt to income ratio, like what we just talked about, 36%. Some of them will take you all the way up to 50% if you have an excellent exit strategy. And we're going to go back around again to that exit strategy because I just heard the thing ding again. Somebody just joined us in the Zoom. So that's additional people that we have in the Zoom that weren't there in the beginning. And I'm going to go back through it again because I owe you that, because everything crashed in the beginning. And so a lot of you were here and you missed a lot of it. So I'm going to go back through it again so you don't have to worry about what you've missed. Okay, so entity, form your entity. Next, you want to have your financial statement. You can go to your CPA, or if you don't have a certified public accountant, but you do have a bookkeeper or an accountant, they can do your financial statement for you. What I want you to do is to be able to prepare your own financial statement so that you, when your bookkeeper is doing it for you, you can just make sure that all the items are there that are going to be prevalent to the lender that will be looking at your file. So in your financial statement, as you're looking at your liability um, versus your revenue, your income, you make sure that both sides balance. Both sides are going to look, they should balance. But when you're looking at your corporation, you want to make sure that you involve your stockholders' equity, because that is a value. See, that's the difference between you going as an individual or you going as a business owner. As a business owner who has formed an entity, you now have stockholders' equity. And that is, it is a part of your net worth. Yes, yes, it can be considered an asset. And that's what they're looking at, asset versus liabilities. And when you complete your financial statement, and of course, if you go, through the book, the ebook, it's called Homeownership Pre-Planning Course. And in there, it shows how you, gives you step-by-step instructions on how to complete your own financial statement. You still want to get it done by your bookkeeper, but they may not know that there are certain things that you want to include in there that will be, again, substantial, I guess, interest to your lender. But you'll know, because you'll know from this course. So you can always tell your bookkeeper, well, I want to add this as well, because this is a value. This is considered an asset, and I need to have it there to offset any liabilities. Okay, so what they're going to be looking at is your net worth on your financial statement. Okay, going back through again. You want to make sure you form an entity. If you're operating as a sole proprietor, we're going to stop that today. And we're going to go ahead and take the steps to form either an LLC or a C corporation. Both of them are very easy. I'm assuming you already have your federal ID number. If you don't have it, you want to get that. That's the first step, because that gives your corporation, your company, an identity. What you're doing is you're creating an entity that will be able to be a tool that you can use to purchase these properties. Now, when you purchase the properties, if you're going to go through some of the lenders that we've talked about, they're going to want to know that you have an exit strategy. Why? Because they specialize in loaning to businesses, but they're looking to loan you the money on a short term, anywhere from 24 to 60 months. They're not going to go any longer than 5 years financing you. Now, that doesn't mean that they can finance you for 5 years, but your amortization can be based on 30-year payments. Are you hearing me? But it's a short-term loan. And at the end of 5 years, and you've been making a monthly payment at 30%, or you may have just been paying the interest on the loan. And we also in the book talk about ways that you can calculate your monthly interest and then understand how to prepay your interest to reduce the amount of your payment that's going towards the interest and allow more money to be applied towards the principal. Okay, so they're going to only loan you money on a short term. Everybody with me so far? Okay. They're going to loan you the money on a short term. And what they're going to say to you is that they need to have a solid exit strategy. If you're going to buy land and flip it, if you're going to buy land and monetize it, if you're going to buy your home or residential property or office building, but you don't intend to flip it, you intend to keep that piece of property long term, then they're going to be looking to for you to show them how you're going to refinance the property to pay them off, to get them out. Okay. Okay, she says, what's the name of the ebook again? I've got somebody on Facebook. Okay, y'all forgive me. I'm looking at the Zoom screen, but I can't see the Facebook screen. So just bear with me. I am going to, it's called the Homeownership Pre-Planning I don't know if the people on Facebook got a link. So here's what I'm trying to see how to handle this. Y'all forgive me. I don't know if you got a link to the Zoom, because if you did, you'll register and it will automatically set you up to receive a copy of the ebook. Oh, Elder Smith, I see who this is now. Oh, I can just send you the book. Yeah, the homeownership pre-planning course. Yes, that's it. And I will send it to you right away. Forgive me, I couldn't see the name. Y'all bear with me now because I'm looking in the Zoom screen and I'm not seeing the, yeah, that's it. The homeownership pre-planning course. It's a book that I authored and I based it over this I'm about to use a old school term. Over umpteen years of experience. Y'all know that term. Let me just give you a little gander at the book here. All right. Can y'all see my screen? Can everybody see that? Okay. So it's a lot. There's a lot in here, but let me tell you something. When you walk away from this book, you'll be ready to buy property, flip it upside down, sideways, whatever you need to do. You can organize it. You can, let me tell you something. When you finish this, you can deal. Hello? And it's free. So it's called the Homeownership Pre-Planning Course and much, much more because it's a whole lot more that's in here. Here's a table of contents that gives you a general idea of what's in here, but it helps you prepare yourself. All that's the table of contents. Prepare yourself for whatever it is you want to do. Let's see, you're out looking at properties. Okay, you got your LLC or your C corporation together. You've gotten all of your organizational documents. You're ready to roll. Before you did that, you went and got your federal ID number. Before you did that, you checked with the state to make sure that there was no other company operating under that name in that state. And I want to make sure you understand you do not have to form your company in the state that you live in. There are some, we own companies that are in various states. We got some that are organized in Rhode Island, some that are organized in Delaware, some that are organized in Alabama, Georgia. I mean, you don't have to organize your company in the state in which you live. What you want to do is look to see which state offers you the best benefits when it comes to tax, when it comes to organizational infrastructure. Some states you can organize in. We got one in Nevada, and that is because they don't want to know who your officers are when you form there. That's a whole nother story. We won't get into that on this, but you can form your entity anywhere. But wherever you intend to form that entity, you want to check with that state to verify whether or not there's another entity with your company name. Once you've done that, you get your federal ID number under that name that you have reserved with the state. And then from there, you go to form your organization. It's an easy process. We've got templates that are in this book that show you step by step how to create your own LLC or corporation. Real easy. And then you file that documentation with the state. You pay your necessary fees. Now, we're not going to list the fees in the book. You're going to have to check those fees with the state to confirm it. You go to their state's Secretary of State's site under business entities, and they walk you through everything that you need to do as far as the documentation that you complete. It's a very easy process. Okay, so anyway, back to this book. So if you just look at the very beginning of the book, we show you how to take your APR and how to break that down into a monthly interest. Because what that does is give you the tool that you need to prepay interest, which now assists you in navigating how much money is going to be applied towards your principal versus how much money will be applied towards interest. That's going to help you reduce the amount of your amortization very quickly. So anyway, perusing on through the book, it also shows you how to determine your monthly payment, how to make your monthly payment. If you're going to purchase property as a business owner and you want to know maybe about flipping it, about how you want to create revenue from that. There are areas here, or what if your exit plan is going to be refinancing. It tells you in this book which loans are wisest to utilize to refinance and what loans are not. It gives you examples of calculations that you can use to show you whether or not you're about to refinance in a situation that's going to be upside down for you and leave you in a worse financial position than what you started. Because sometimes people get desperate. They want to refinance. They bought a property. Okay. They bought it with a lender that was going to finance them short term, 60 months, 5 years. Their monthly payments are amortized at 30, as if it was a 30-year loan, 360 months, but they have to pay it off in 60 months, in 5 years. So they get antsy and they're ready to refinance. And sometimes they choose the wrong type of loan to refinance because they're trying to exit out of the deal that they've gotten with the lender so that they can leave themselves with a good payment history with that lender, just in case they need to go back to that lender to purchase more property. But they end up getting a type of loan that may not be the wisest type of loan for them. Okay. So when you do that, you can place yourself in a financial strain. And then it kind of encumbers some funds that you would use to purchase other properties. So you don't want to do that. You're going to start your plan and you want to work it all the way through. And so we show you loans that I don't like to use the term predatory, but we show you loans that may not be the wisest type of loan to get. And it says here, you want to know when to say no to a refinance or a HELOC, and then it shows you the type of loan that you would want to say no to it. It's not always obvious. Um, but it shows you it gives you an example of one that doesn't appear to be a loan that would be a problem, but then it walks you through how much interest you would pay and all of that so that you know whether or not it's a wise enough thing. I don't want to belabor the point, but the homeownership pre-planning course kind of equips you as a business owner, as an individual, whatever you want to do, it equips you to be able to do that. It provides you with a multitude of information that you can use for various reasons. I don't see any other questions. So we're going to slowly come to an end. I'm just thumbing through trying to give you an idea of all the different aids that are in this book. Even if you're not a business owner and you're looking to start purchasing property, it shows you ways that you're able to do that. And I think the biggest thing that I wanted to make everybody understand is that if you're a business owner and you want to start purchasing property, business owners, people don't like to talk about it, but if you've been business for a long period of time, you've had some ups and some downs. Your credit's not always going to be exceptional, but you can still purchase property. You can still buy it, and you don't have to get those excessive rates, and you don't have to deal with a predatory lender. These are just simple ways. And the very first thing we talked about, find out in the state where you want to purchase property if the company name that you want to use has already been used from someone else. If it hasn't, reserve that name in that state. You don't have to incorporate in the state where you are. You find out what the each state has to benefit business owners. Okay? All right, that's the first thing. And then once you have reserved your name in that state, you then go to get a federal ID number based on that name that you've reserved. Okay. You get your federal ID number. Okay. And then you want to go back through, and after you've gotten that, you want to use the kit that's in the book to help you organize either your LLC or your C corporation. Okay. And then now that you've gotten all that organized, now there's a list of lenders in there that loan to business owners. And there are so many other lenders. This just gives you an idea of some of the companies. These are companies that we've worked with that we are tried and true, but there are a multitude of companies that will loan to businesses to purchase property. Okay. You want to get that financial statement together because that's one of the first things they're going to want: your articles of incorporation or your organizational documents if you are LLC. They're going to want your financial statement of the corporation. Yes. They may or may not want whoever the personal guarantor's information is. A lot of times they'll just go with the company. They'll go with the company. They'll get your information, but they'll be basing everything on the financial ability of the company to repay. And a part of that financial ability is your ability to have an exit strategy to pay them off within the amount of time that they have allotted to allow you to use these funds. Is that making sense to everybody? Okay. Okay, so I'm going to stop right here. I'm not seeing any other questions. If you want a copy of the book, just put it in the chat, in the comments in the Facebook, and in the chat in the Zoom. If you would just put your email in the comments on Facebook, and in the chat on the Zoom, put your email address and your name, and I will make sure that I get you a copy of this book. Now, allow us at least 4 to 5 days, because we got a lot of them that we're getting out. And if you want a copy of this recording too, you can put that in there and we'll get you a copy of the recording. But I mean, if you're on Facebook, you can just always go back and look at it. But I mean, if you want a copy of it, we'll be more than happy to get it to you. Specify the things that you need from us and we'll get them out. We're kind of backlogged from some prior um, Zoom meetings and classes and courses that we've done, but it won't take us long. We will definitely get it to you within a week's time. Okay. All right. If there are no other questions, and again, I'm hoping that I answered the questions that you guys were asking. I apologize for the little hiccup that we had with the internet earlier tonight. This is just a tip of the iceberg. There are so many things that I want to share with business owners. I'm choosing my words, but I do know that there is a stress to business owners. They feel like they are unable to purchase property because they've had some financial ups and downs. But there is a way to purchase, and it's not through predatory lenders. Coming from somebody that has experience with ups and downs, yeah, I understand that you can still purchase and go forward. Even if you're renting a home right now, I know what that's like, and still own land somewhere else. It's okay for you to do that. That's your prerogative. You can do that. You can own other properties as well. You can do that. And there's a way to get it done. All right. So stick with me. And each time we talk, I promise you, you'll learn more and more. And if you're not learning what you need to learn, ask the question. Chances are it's either in the book or we can put it in the book. Okay. All right. So let me see. I'm looking for the exit button. Here we go. All right, you guys, just a reminder, I'm Jacqueline with National Land Realty. Today, right now, this very moment is the best time for you to purchase real estate. Thank you. I'm watching everybody sign out.